MetaTrader. Here on the charts you can see that here we had Asian session range, we had this manipulation, we had this bearish move in the London session, so this is what we call manipulation, and then we had nice structure shift here to trade this distribution phase. So yes, let's jump to the charts. I will share with you how you can trade reversals in the New York session. So for example, when in the London session you see price moving into downtrend direction, and then in the New York session, once the New York opens, then of course you can look for possible reversals in this particular trading session. So our focus, as you saw before, our focus was to trade this phase to the upside, and now let's go to the charts I saved for you and also for the students in our mentoring program. Now let's go over the charts. So here we can see the daily time frame. So on the daily time frame, if you have watched the yesterday video, in the yesterday video I covered our short trade because we saw this shift to the downside. So in yesterday videos you can check how we traded the move to the downside. But today, as you can see on the daily time frame, what we noticed, yes, of course we have this bearish downtrend, but what we also recognize is that market formed kind of a bottom here. And not just that, as you can see, based on the yesterday's candle's low, what happened today into today's candle, into today's price action, market actually swept this yesterday's lows. And if the market sweeps the yesterday's lows, especially in this kind of a bearish downtrend, then of course your idea is to look for possible shifts on the lower time frames, shifts of the market structure in order to trade potential bounce back up higher. So this is something that you need to remember, especially when you see the sweep is happening, as for example in London session, and then in the New York session you can trade those reversals back to the upside. So this is what we had in mind today with our students. That's how we approach this euro-US pair. Now moving forward, what do you see here back on the daily time frame? So here I marked those comments. So trend, as we said before, was bearish, of course, but the bias was bullish. As you can see, the price swept this yesterday's lows and turned around. So in this case, of course, we were looking for potential bounce back up higher. Now moving to the next hard time frame, the 4-hour time frame, that's where we want to see. If you have watched yesterday's videos, then of course you understand that the next thing we want to see on the particular chart is of course higher time frame level of interest. In this case, we had 4-hourly sell side liquidity, so the previous 4-hourly swing lows in this example, combined with this bullish 4-hourly fair value gap imbalance. So in this case, the bias was bullish, the sell side liquidity, the previous 4-hourly swing lows, in other words, were swept, and in combination with this bullish hard time frame fair value gap level imbalance, then of course this particular level was really strong to look for possible reversals, possible bounces back up higher. So that's what we had in mind today. Now zooming in a little bit, this 4-hourly time frame, as I said, focus on this 4-hourly sell side liquidity, the previous lows. So in this case, we understand that yesterday's lows, this level, was swept. We had 4-hourly sell side liquidity as well. And when this level is swept and market comes back up higher, then of course your job as a trader is to look for possible structure shifts on the lower time frames in order to trade potential reversal back up higher. So this is exactly what happened here. As you can see on those two 4-hourly candles, this is very clearly visible. So the sell side liquidity was taken, market swept this level, and we had 2 4-hourly candles sweeping this previous liquidity, spiking at that particular level. And this is really, let's say, clear signal that on the lower time frames, your job is to look for that structure shift to the upside in order to trade this bigger move to the upside. So that's everything you have to know from the 4-hourly time frame. And as I said, we have 2 4-hourly candles with a spike. Now let's also check the 1-hourly time frame. So at that point of time, what the 1-hourly time frame was doing, same thing. As you can see, it was bullish. Market formed this higher low on that level. We had also 1-hourly higher swing low confirmed at that point of time. And as you can see, all the major time frames, daily, 4-hourly, and as well the 1-hourly for structure, all those time frames were bullish. So your only job as a trader is then to wait for 15-minute time frame price action to see that bullish signal set up on that time frame, to pull a trigger and to manage this position with the goal to trade this potential bigger move towards that next higher time frames liquidity levels. So in this case, 1-hourly was bullish, and if you go to the next one, here on the 15-minute time frame, the structure shift was confirmed. So if you take a look at the first chart of this video, that's where we traded this market structure shift. So we understand that daily time frame is bullish, 4-hourly time frame is bullish, 1-hourly time frame is bullish. And the only job, as I said before, once this liquidity, the higher time frame level is swept, then of course, if this is the 4-hourly time frame, on the 15-minute time frame, your only job is to wait for that bearish price structure to switch on its own structure and then look for potential long setup. And this is exactly what happened. So this is the 4-hourly liquidity level. We had this bearish structure here, and then what happened in the New York session, we had price moving higher, breaking all those previous short-term highs, leaving us with this bullish imbalance, fair value gap level. Market retraced, confirmed this structure shift, and that's where we're looking for an entry. Your job, as I said before, was to just wait for the 15-minute time frame to confirm its own structure shift, to pull a trigger, and then to take this trade to the upside. If you remember from start of the video, what else did we have here? We had also this Asian session range, which is called accumulation. We had manipulation, this bearish structure, market manipulated, took all those Asian session lows, 4-hour liquidity levels, the previous swing lows. So this is what we call manipulation. And then once the New York opened, we had nice shift to the upside with this bullish imbalance, as you can see. So in this case, market moved higher with a new high, retraced back, created this confirmed lower time frames 15-minute market structure shift, and that was your, once this was confirmed, that was your, of course, entry setup to go long with the stop loss below the structure, and then target at least 1-to-1 or 2-to-1 in terms of risk and reward ratio. Depends on your trading plan, because we had also the news about the USD, we have some speeches, and this was our long trade. As you can see, that was our entry. Stop loss went below low of the days, below the low of the structure, and we took this trade with more than 1-to-1 in terms of risk and reward ratio, because we had also some news. And if you go back, as you can see on the Forex calendar, you can see we had some Fairchild Powell speaks, and this could affect the market, and therefore we booked the profits. We closed this trade because we had some news around that at that point of time, and Of course, when there are red news, then of course you don't want to give everything back in case the market do something else. Of course, we could take some profits out or move the stop loss to the break even and let it run. In this case, this will be 3-to-1 in terms of risk and reward ratio, but I was happy to close this trade with nice profits there before the major news releases and all those speeches. So hopefully you learned something from this video. As I said before, I described how you can trade these reversals in the New York, especially when you have this accumulation, when you have this bearish market structure manipulation phase in the London session, and then once the hard time frames liquidity levels and previous lows are taken, then of course you can trade this distribution phase in the New York. So this trade today on the euro-USD was really clear example how you can trade the New York reversals based on the London's price action and based on the hard time frames liquidity level. So hopefully you learned something from this video. Make sure you check it again in order to understand if you're new to our trading style. And of course, I wish you a lot of success on the market. So thanks for watching, and we catch up. So take care.